The dollar seems to be getting stronger, and no one is paying attention to it. What does it mean for you? Hello everyone, and welcome back to another episode at NOVARISER Invest, your channel for financial education. So today we're going to talk about something that not too many people seem to be focusing on, and that's the fact that the dollar is getting stronger in spite of the fact that the government keeps printing money. Traditionally, you will think that the more money is being printed, the more the currency is going to devaluate because there's more of it in circulation. But it seems that this case, it's a little bit different given the circumstances that are happening elsewhere around the world. So what we're going to do is just to study what's causing it and how does that impact you and what you can do about it in terms of protecting your net worth. So let's get started. So first off, I want to get started with this article from the Wall Street Journal, which is what started my curiosity around this subject. So on the subject line, we have a strong dollar sends euro to lowest in more than a decade, soaring energy prices, dim economic prospects in Europe and elsewhere, prompting flight to the US currency. So the euro near a 20-year low against the dollar after natural gas and electricity prices surge on the continent. Currency traders fear Europe's economy might buckle if Russia completely shuts off natural gas supplies that are used for heating homes, keeping lights on and running factories. Energy prices were further boosted by labor strikes at Western Europe's largest gas field in Norway. And it seems that the bloc common's currency fell as much as 1.5% against the US dollar to trade at 1.0265, its lowest level since late December 2002, according to FactSet. Its decline, as well as the dollar strength this year, has renewed the view that the euro could reach parity with the greenback. So before we proceed for the article, I want to pause here for a minute to talk about this phenomenon. Like I said at the beginning, the expectation is if you print more and more of the currency, typically the currency is going to devaluate in value. However, given all the circumstances that are happening around the world, as you saw in the recent article, how the energy prices are going up and how the war in Ukraine, one way or the other, is impacting the energy prices, that in a way it's starting to create conflict, and then more and more people start to stop trusting the local economy and therefore their local currency. And that leads people to seek for alternatives to part their money to better protect their net worth and not let everything devalue with inflation or with whatever issue that might be happening at the local economy. Now, I understand that with everything that has been happening, you hear in the news, recession, and then you also hear about inflation hitting the US as well. But when you take all of that into consideration and you compare things here in the US with how the circumstances are all over Europe or the rest of the world, the US seems relatively stable in comparison to other countries, which is why a lot of people overseas are looking to park their money here in the US to better protect their hard-earned money. So I wanted to emphasize that, and let's continue with the article. At the same time, we also have that the dollar also rose against the Swiss franc and the Japanese yen, two stalwart currencies that normally attract investors at times of uncertainty. And the yen slipped to nearly 136 to the dollar, close to its weakest since 1998. Now, I want to also highlight that Japan in itself, it's going through its own issues, so to speak, right now, because if you haven't heard in the news, the former prime minister was assassinated recently with a gunshot. So I don't know how that might affect the global economy as of now, but this has been something that it's not common in Japan. You barely hear major issues happening with gunshots or assassinations and stuff like that. So I don't know how that's going to impact the global economy in the long term, but it's definitely something to keep in mind. Now, as we continue in the article, and a sign of the broadness of the dollar rally, the US dollar index, which measures the dollar against a basket of currency, hits its strongest level in nearly 2 decades, bringing its year-to-date gain to nearly 11%. The move in the dollar index, if sustained through the end of the year, will be its biggest since 2014, according to FactSet. Interesting. So now let's just move on to our next article right here from Bloomberg. And it talks about recession fear drives greenback to strongest levels in 2020. This is the greenback, okay? Euro tumbles to 2-decade low, nearing parity with dollar, and the Colombian peso slumps to all-time low amid global sell-off. Quite disturbing right there. So the dollar surged to its strongest level in more than 2 years as growing concerns about recession prompted investors to pile up into haven assets, and riskier currencies from Hungary to Colombia were smashed in a day of busy trading. The greenback streamrolled almost everything before it on Tuesday, rising more than 1% against most major developed market peers, and there was an increased speculation that it might soon reach parity with the euro. So as you can see here, Bloomberg has its own index to measure the strength of the dollar, and they call it the Bloomberg Dollar Spot Index. And this is where you get to see how the dollar is reaching, its value prior to 2020. Now, there's also another index right here that was mentioned briefly by the Wall Street Journal, and that's the US dollar index by ICE. And in fact, this is the one that I use most of the time to kind of like measure the strength of the dollar in comparison to other currencies. And we're going to talk about the ICE US dollar index in a little bit. But I wanted to come back here into this graph just to share with you a little bit of a fun fact. So they're talking about how the greenback surges to its highest level in more than 2 years. But then if we take a comparison into historical highs, and it hasn't really reached that point in where it's at the highest, because if we come back here to 2001 or over here in 1985, now we get to see that we're really talking about the dollar being really, really strong back here in the days. But in comparison to other currencies today, it seems to be doing pretty good. Now, I promise you we're going to talk a little bit about the ICE dollar index, so that way you can learn how to read it and how to interpret it. So the ICE dollar index uses the following. So it's known as the USDX. And this index was actually established in 1973 after the Bretton Woods Agreement was dissolved. Okay, so for those who don't know what Bretton Woods stands for or what it means, the Bretton Woods Agreement was an agreement that was set in place, and it pegged the value of the dollar to gold. Now, this was dissolved in 1973, and so the value of the dollar was no longer pegged to the gold, and a measurement tool was needed in order to measure the value of the dollar in comparison to other indexes, and that is how the USDX came to life. So the way it works is the following, right? So let's say you have the USD right here. So we have the US dollar, and the USD is compared to a basket of other currencies. It's measured against that. So in that basket of currencies, we're talking about the euro. We also have the Swiss franc right here. And there's also the Japanese yen. We also have the Canadian dollar, the British pound, and there is also the Swedish krona right here, right? Now, there are also rumors that there will be 2 other currencies that could be added to the equation, although they haven't been confirmed yet, and that is the Chinese yuan. That will actually be interesting to see if they do get added, with given everything that's happening with COVID. And the Mexican pesos is the other one. Again, it's a rumor. Nobody knows yet for sure if they're going to be added to the basket of currency, but it seems that they are contenders, right? Now, how do you read the USDX, right? So the index is based on a scoring system of 100. So let's say, for example, if you see an index on the gold of 106, that means that the dollar has appreciated 6%. It went up 6% in value. On the contrary, if you see a index of 94, that means the dollar went down 6%. How do I got the 6%? You just 100 minus 94. Just as simple as that, right? Now, another component that is important for you to consider, just so that you can understand how to read this measurement and also see what is impacting it, it's understanding how it behaves, right? So this index is heavily impacted by macroeconomics. And so what particular about the macroeconomics actually impacts what's happening? In that list, we can include inflation and also deflation. And when we talk about inflation, deflation, we're talking specifically about the countries that these currencies represent. So we have the dollar here in the US, so the euro, the Swiss franc, yada yada, and that list. So it's only in comparison to those nations. At the same time, another aspect that impacts these index is recessions, right? So any type of recessions or economic growth can also impact the value of this index, whether it goes up or whether it goes down. And as you saw, now that you know this, hopefully this information over here will be much more clearer for you, because as we read at the beginning, there are a lot of issues happening in Europe, a lot of things in Europe happening because of the war between Ukraine and Russia. And over here, we also talked about the assassination of the former prime minister. And just to add more to the equation, we also have issues in Europe and the UK as well, with everything that's happening with Boris Johnson and him stepping down. So it is a tumultuous time. And so when you put that into comparison and taking this information right here into consideration, then it will make sense that the dollar, it's gaining advantage in this case because of everything that's happening on these countries right here. Now, just to clarify any confusion, a lot of what's happening is taking place overseas. So it will be pretty common to think, well, if it's happening overseas, how is that impacting my life here since I live in the United States? And so I just wanted to highlight or remind you that nowadays we live in a globalized world. So there's nothing that could happen in one country that doesn't affect the other. So we're all connected one way or the other. Some of you might already experience what happened with the war between Ukraine and Russia, and how that impacted gas prices here in the States and a bunch of other stuff on the supply chain. So when you take that into consideration, you get to see the bigger picture and how we are more connected than we ever thought we will be. In addition to that, once again, I wanted to put an emphasis on the fact that I understand that there's a lot happening here in the US with inflation and with the possible recession coming, assuming it's not here already. But it's the fact that when you compare what's happening in the US with everything that's happening around the world, the US may seem still a relatively stable option in comparison to elsewhere, right? So I wanted to highlight that. Now, at a high level, the fact that we live here in the US and we make our living based on dollar, we might get that sense of relief in the sense that, hey, if the dollar is strong, that means I should be doing pretty good, right? But I will hold on that thought, because everything in excess is not necessarily good. So what we're going to do now is just to look at the pros and cons of having a strong dollar and see how you can adjust based on that information. And if it doesn't benefit you one way or the other, we were going to explore some of the options that you can actually leverage to protect your net worth and protect your money. Now, I want to take a moment to remind you that if you like this episode, feel free to hit the like button right here below so you can help this episode rank and help others like you looking for information of this kind. And if you happen to know somebody who will find this information useful, feel free to share the love and send this episode their way so you can help change their lives for the better. Back to the episode. So we're going to go ahead and just divide this sections right here. So we got the pros and the cons. So let's start with the good stuff, right? What's one of the greatest things about having a strong dollar? Well, having a strong dollar helps boost confidence, right? So the status of a reserve currency gets boosted up, which gives the impression that the economy is doing great or that the economy is doing better than most people thought. And that will attract international investors, right? So people are going to want to come in and invest their money in our economy. And at the same time, why not? invest money in bonds, and that will get reinvested back into the economy one way or the other, right? So that's great on that end. So for those who are actually looking for investors, or you're investing in deals and you're looking for partners that have cash, this is a great thing for you because now you get to tap into that liquidity. Another positive about having a strong dollar is the fact that your money will be worth a lot more when you travel overseas. Why? Because when you have a strong dollar relatively to other currencies, when you're doing the exchange rate, you'll typically get more bang for your buck. And this becomes, in a way, an affordable vacation, even if you could be doing something luxurious. So that's on a good note, right? Another thing, assuming you don't like to vacation and you prefer to vacation in the US and not necessarily overseas, or that you just simply enjoy living in the US, so imports over here are actually more affordable as well because of the fact that you have a stronger currency. So that means that you have a purchasing power that it's bigger in comparison to other currencies, so you can import more items from overseas and enjoy better deals. A great example of this, let's just think about a luxury car. So we have a Mercedes-Benz right here. So let's say if you were to use the euro and you were to buy a Mercedes-Benz with euros, that car could end up costing you 89,000 euros, right? But then when you convert the currency and you take it onto the exchange, that means that that car, that same Mercedes-Benz, it's costing you now $70,000. I don't know what's the exact exchange rate, but this is just for illustration purposes, right? So those are the things to consider on a good note. Now, on the con side, right, what are some of the things that are somewhat worrisome and that you should be on the lookout for? Well, it's the fact that when the dollar is strong, it becomes expensive overseas. So for people who actually are residing elsewhere and they're making a living based on their local currency, it becomes more difficult for them to buy more dollars. And what that could happen is that tourism could be affected. I know that when you look at tourism in itself, it might seem like such a small portion of the economy, but it could impact you more than what you think. So let's say, for example, if you invest in real estate and you're doing Airbnb, that could impact your business model if you're located in an area that relies solely on tourism. You may see a slowdown in volume, not necessarily killed at all, but you could see a slowdown in value, and that ultimately could affect your cash flow. Another thing is if you have a job or you work in areas where businesses are highly dependent on main attractions or touristy attractions, those businesses are going to suffer as well as a result of having a stronger dollar and more expensive conversions for people to come to the US, just to travel and do tourism. So that's one thing that needs to be taken into account. Another thing that will impact you actually more directly than you think is companies. So companies, for example, like Coca-Cola, or companies like, for example, McDonald's, that they don't only do business here in the US, but they also do business overseas. Their sales could be heavily impacted by the exchange of currency, because if they're doing business elsewhere, right? Let's say, for example, if they're going to Mexico and they do business over there, their Coke, their McDonald's has to be sold at the local currency in Mexico. And if the Mexican peso is weak in comparison to the dollar, that means that the exchange rate won't be beneficial to these American companies. And that means that their sales are going to be impacted. And before you think that, hey, that's not my problem because it's just the company's problem, think twice, because all of us, to a certain degree, we have pensions, we have 401ks, we invest in the stock market, and some of us do buy ETFs, right? So some of your pension could be invested heavily in Coca-Cola and McDonald's. Same thing for your 401k, same thing with your stock. Even the ETF that you're buying could have a fraction of any of these stocks, not necessarily Coca-Cola and McDonald's, but any company that is doing business overseas. So one way or the other, it is impacting you in a negative way. Also, another con about having a strong dollar is that it is harder for the US to compete with the exports, because if you're presenting something made at a certain price with a stronger dollar, that means it's more expensive for other countries to buy it. And if a competitor comes in, let's say, I don't know, Honduras, and decides to make something, a product, the equivalent of whatever you're making, and is offering it for a fraction of the cost, most countries, most nations will tend to want to go for the cheaper product. It's just the nature of how things are. And for those who are not aware that the US actually produce something and they can export, the US is actually a big exporter of cars or anything in the aerospace field. And remember that the impact is not only felt on the car companies or aerospace. A big example of this is Ford, just to, give you something as a point of reference. Remember that these companies, they employ people. And if they're unable to compete overseas, that means they're going to have to either slow down production or just cut down on jobs. So one way or the other, it does affect you. It does impact you. Another point worth mentioning, it's in the area of real estate, because we do know that we have a lot of people that is actually tuning in from overseas as well. So welcome and thank you so much for your support to our channel. If you happen to move to the state because you were in search of a better life and you're working here by making money in the local currency with dollars and then sending it back to your families, this is also that could affect you one way or the other. Same thing with your investment in real estate. So on the good note, when you have a strong dollar, real estate becomes more affordable in your home country, right? Because your dollar is worth more. That means you can convert it and then you can buy more items, assuming there's no inflation in the area, right? But let's say that you decide to buy those properties and you put them to rent and you start collecting rent. That's when it becomes negative, because when you have a stronger dollar in comparison to the local currency in that country that you're investing in, that means that whatever amount that you're collecting in the local currency, it's going to lose value when you convert it back to the dollars. And that's something that you should definitely keep in mind when it comes to making a decision as to what to do with your money. Now, the part where everybody is asking, what should I do then? I'm in the US, I live here, I earn my living in dollars, but I also know that there is a lot of inflation going on. How do I protect my money from deterring further, right? So one option is to invest in debt, right? You can invest in treasury bonds or bonds in general. That's going to help you protect your money against inflation to preserve your capital. Now, for those who are looking to learn to invest in bonds the right way, or learn a little bit about what is a bond and how it could benefit you, I created an episode not too long ago that you can check out right here on the side, and it's going to help you make a more informed decision. The other way is just by investing in assets that you know could appreciate over time. One of those is actually real estate. If you happen to be overseas, try to figure out what's your financial or your economic situation in your country and see if it's worth for you parking your money in here in the US in the form of dollars. And of course, investing in real estate, it's also a great way to do that as well. Since this is a real estate investing channel, I want to invite you all to sign up to a free webinar when you can learn about investing in real estate the right way, and it's free of charge. All you got to do is just to click on the link here down below, and I will be seeing you at the webinar. Take care. Bye-bye.